What is up, everyone? So I lost a lot of money recently and
I'm not even mad about it.
so a few of you guys have asked me what I'm doing right now to weather the storm and whether the stock market will crash. So in this video, this is my take on whether the stock market will crash and what you can do right now to take care of yourself. Make sure you watch this video all the way to the end, because at the end, I'll be sharing the additional things that you can do right now to prepare for more events like these in the future. And no, it doesn't involve you stocking up a garage full of toilet paper, but you know what it does involve? Is you destroying the like button. If this is your first time here, welcome. Make sure you subscribe to my channel and click onto the bell so that every Wednesday, you have an Asian bold guide sliding into your notifications. And without further ado, let's go! If you had any kinds of internet connection, I am pretty sure you've been bombarded with these headlines.
Will the stock market crash?
The Dow Jones could fall by 40% today.
Is it a correction or a crash?
You gotta be wondering, what the are they talking about? What's the difference between a market crash and a market correction? And is the market actually going to crash? And before I tell you whether I think the market will crash, let's just quickly go over some of the fundamentals of what is a crash, what is a recession, what is a market correction, and what is a bear market. The news media doesn't make it easy when it comes to understanding what's happening in the economy with all these fancy little jargons and making things more complex than it seems. So let's just take some time to understand these concepts first, and then I'll talk about whether the market will crash. With market corrections, it's essentially a gradual 10% drop from recent stock market heights over a span of days, weeks, or months. Now, market corrections actually happen more than you think. Since 1946, we've experienced 26 market corrections in a span of 74 years, which really just means that every 3 years, we experience a market correction. Now, a market correction historically have declined our asset prices by approximately 14% over the span of 4 months, and it took another 4 months to recover back to normal heights. But the difference between a market crash and a market correction is that a crash is a lot more severe over a shorter amount of time. Now, a really good example of a market crash is the 1929 Wall Street crash. Now, over a span of 2 years, the Dow Jones Industrial Average lost approximately 89% of its value. If you are still confused about what financial market indices are or index in general, I've actually done a video on index fund investing, I'll leave it right here. But the Dow Jones Industrial Average is essentially a portfolio of the top 30 companies in the stock exchange. And that market crash was essentially the beginning of the Great Depression. Now, a crash can lead to a bear market. A bear market really just means that it's a prolonged period of stock market prices declining beyond 20%. Let me link everything together. When there's a prolonged period of stock market prices declining, it means that companies don't have as much cash to invest in its operations to grow. If the company can't grow, it means that it will have to lay off workers to stay in the business, sustain the business, if you will. And if people are laid off, it means that they're gonna spend less. And if people spend less, it means that the company will make less money. And if the company makes less money, the cycle just goes on and on and on again. When that negative cycle starts spinning, it means that our economy won't be growing. And if our economy experiences negative growth over 2 quarters, we are officially in recession territory. So, are we in recession territory? Not yet. If you're in Australia, we have not experienced negative growth since 2011. Now, if you're in the US, you actually have not experienced negative growth since 2014. But does that mean we will not head into a recession in the future? No. And the question to whether the stock market will crash in 2020 is this. The stock market will crash eventually, but no one would know when that will happen. But the one thing I do know for sure is that investing is a habit. And for me, because I'm a long-term investor, especially in my 20s, what I have, the most valuable asset is time. And I will invest no matter the time is good or the time is bad. I want to shed some positive light on this because it's not all doom and gloom. So here's a fun fact before we jump into the positive news. Do you know why it's called a bull versus a bear market? Because a bull attacks by thrusting their horns upwards, whereas bears attack by swiping down. So when a stock market goes up, it's deemed to be a bull market, whereas a bear market is going down, so. Here's the positive news. Look at the screen right now. Here are all the diseases that have impacted our stock performance since 1970. What I'd like you to do is to pause this video, zoom into the graph, and let me know in the comments below on what you think the pattern is when it comes to stock market performance after it's faced with a disease. Pause it. I'll even create a segment here where it's just an awkward silence. Welcome back. Assuming that you are not part of the 95% of viewers who didn't pause this video and decided to continue watching anyway, here's the point. In the majority of the cases, our stock market will likely recover within 6 months. But when it comes to market recovery, it's not just diseases. It's a similar story when it comes to other events like the dot-com crash or even the GFC in 2008. But in those events, it took longer to recover. But the bottom line is that no matter what happens to our stock market, it will always recover. It doesn't matter if it takes 6 months, 12 months, 20 months, or 30 months. At the end, it will always recover. And when it does recover, it claims new heights. So if you're a long-term investor like me, especially if you're in your 20s, these events are an incredible investment opportunity for you to enter into the market at a significantly cheaper rate. And the one most valuable asset that we have that will really help us in the long term is time. And given enough time, the market will always recover. That's why I'm not mad about losing a ton of money recently, because I see this more as an opportunity. Which brings me to my next segment in this video, what you can do right now to take care of yourself. So here are the 3 things that you can do right now to take care of yourself. Number 1, you want to make sure that you take a step back, let the emotions pass, and don't make a knee-jerk reaction. Now, a knee-jerk reactions is often very emotional decisions, and emotional decisions tend to hurt you more than it benefits you. Number 2, you want to remind yourself what your investment horizon is, as well as your risk tolerance level. Now, your investment horizon really just means how long do you plan to invest for, and your risk tolerance level means that how much risk can you take on at this given moment in your life. For me, my investment horizon is approximately 40 to 50 years, and my risk tolerance level is still very high because I have time on my side and I'm able to take on more risk right now. If I'm in later stage of my life, that might not be the same, but right now I can take on a lot more risk. Number 3, now granted you have clarity around your investment horizon as well as your risk tolerance level, you need to ask yourself, what is the best move that you can make to bring you closer to your financial goals? For me personally, what's happening in the world right now doesn't affect me too much because my investing habits require me to invest whether the times are good or the times are bad. Now, given what's been happening right now, it's actually encouraging me to save even more than I am right now and also invest more because this will be a golden period for me to enter into the market at a significantly cheaper rate. So you need to ask yourself, what is the best move that you can make that will bring you closer to your financial goals? Now, if you're in a different stage of life and you need help when it comes to thinking about what to do here, make sure you consult a professional because at the end of the day, I'm not a professional and you know your circumstances best. And if you're still unsure, you just need to make sure you talk to a professional to see what is the best move that you can make that will help you ultimately reach your financial goals. 4 is actually a bonus, and that's essentially trusting in the built-in diversification if you have index funds. Now for me, if you've been following me for a little while, you know that I am a big evangelist when it comes to index funds. Now when it comes to buying index funds, there is pre-built diversification already inside the fund. Now what's happening in the world affects industries very differently. Of course, travel is going to be hit very hard, but other industries might not experience as bad of a decline. So trust in the diversification that's already built into your portfolio. So the previous 3 things is what you can do right now to take care of yourself. But what about moving on to the future? What if there is an imminent market crash that's only a couple months away? Or a bigger recession that we are inevitably going to head into. Now those things, we'll never know what's going to happen, but these are the 3 things that you can do right now to prepare for those events. And number 1 is further diversification in your portfolio into safer assets. Now, when it comes to safer assets, I am referring to government bonds. Now, if you want to know more about government bonds, type bond in the comments below and I'll dedicate a full video around everything you need to know when it comes to government bonds. Now, number 2, cash reserves for buying opportunities. Now, this is kind of equivalent as an emergency fund. Now, emergency fund, you can use that for emergencies, of course, but you can also use some of that emergency fund money to capitalize on opportunities like these. Now, number 3 is absolute clarity around your investment strategy. When these events in the future that inevitably will happen, when you have absolute clarity around what your investment strategy is, you already know what your investment horizon is and you know what your risk tolerance level is. You're just gonna get on with your life and you already know what you need to do. So when it does come, it's not a surprise and you know how to deal with it and handle it without making any knee-jerk reactions, essentially. So thank you for watching this video all the way to the end. I'm hoping that this video has shed some new light and new perspectives around these events that negatively impact the stock market. It's not all doom and gloom. Do you know why? Because you destroyed that like button. No, I'm just kidding. The point I'm trying to make here is that these times that are supposedly dark are great investment opportunities if you can see it from that perspective. So as you invest more and more into your financial knowledge, the next time, or even this time, you can capitalize on these opportunities better. And as usual, I would really appreciate it if you can supporting my channel by subscribing to my channel, clicking onto the bell so that every Wednesday you have a bold Asian guy sliding into your notification to make your day just a little bit brighter. Until next time, thank you so much for watching. See you soon.